Hello everybody, welcome back. In today's video, we're going to focus mainly on the S&P 500. We'll go through the daily charts, weekly charts, and understand where we are headed next. So the question that a lot of you have right now is, should I buy, wait, or sell the market? That's the question we'll discuss in today's video, and I'll try to answer that by showing you some of the key indicators that I'm looking at, which is actually telling us which direction we should be looking at, either on the upside or on the downside. So also we're going to discuss earnings that are coming up next week. So if you're into those, keep watching. So I hope you guys are going to enjoy this video and find some value. If you do, like the video and subscribe. It's free of cost. See you soon. So if you've been following the channel, you know that in the past video I was making the bullish case on how the market could actually be going up to the weekly 50 EMA. And that's exactly what happened this week. I was making a comparison back to 1970s in the last video, and we're in a very similar time frame, January to July, and July this earnings season, and the markets went up even back in 1970s, similar situation. Even though the earnings of the companies are not as good, some of the companies missed out on their revenue or the net income, but still the stocks rallied, right? We saw Amazon, Microsoft, Google, they all rallied almost 7 to 8 or 10%, right? Because the expectations are so low. So now everybody is getting into FOMO, or actually, many of the investors are feeling this FOMO. Everybody's saying the market's bottom is in, right? And that could be true. And we'll talk about that. But a lot of people are feeling that, oh, the bottom's in, now we're going to go all the way up, right? And the markets don't work that way. And so if you didn't catch the train when the market was right here, if the train was right here, if you didn't get on it, right, you were outside, getting some snacks or whatever, and you missed the train, right? So now the train is in the next station, on the next station, and you're left behind, okay? If you get on the train right now, that's chasing, and we don't like chasing. That's like getting into FOMO, fear of missing out. Because here's what I think could happen now. And I'll tell you the reasons why. So I think the market has already made the move. Okay. 2 weeks straight up. Okay. It's already gone up. The risk is way more on the downside than on the upside. It's unlikely the market would just rally up all the way to 4,600. It's most likely going to take a breather and the market will come down. And I'll tell you a couple indicators that, a couple things that are actually saying the market actually could be coming down. So, anyways, so the market I think would come down, and the first reason is we're getting into a huge resistance area. This area has been a huge resistance in the past, and again we're getting into that zone, and we will see some selling. Okay, and we are also exactly at the 50 EMA, right? Just a couple percentage points away, right? We're very, very, very close. Okay, so there is much risk on the downside than there's reward on the upside. So there are a couple reasons why I feel that we could see a turnaround story, and the market could actually be coming down and retesting 3,900, or actually going back and retesting 3,600. Okay, and here's why. So the first reason I think why the market could be coming down is because we are overextended on the daily time frame. Look how far we are from the moving average. We're almost 6% away. Okay, the price is actually going to go and hit that level, and then it could come back down. So we're going to be almost 6% away from the moving average. Has that happened in the past? Yeah. See, when we were rallying up, this huge rally came in. We were almost 4% away from the moving average. The price came down, right? Look at here what happened. We were almost down and we were almost 6% away from the moving average. The price came up, right? Same thing here. The price went up, right? It's ultimately just catching up to the moving average because the markets like to go back to the mean reversion, okay? So now if you try to chase this move, right, now you miss the train, right? Now you go to the next station and you say, oh, I'm going to get on the train here, right? Now the train is already coming back to the previous station, right? So you're going to go up there and the market or the trend is going to come back down. So it's better if you, in my opinion, right? That's what I would do. I would wait for the train to come back to the station and then get on it. So the market will go up a little bit, I think, and could actually then start coming back down, and then will allow more people to get on the train, and then we can just ride it along, to the upside. So the other reason is DXY, US dollar index. So we know that S&P 500 and DXY has an inverse correlation. That means when the dollar index goes down, the S&P 500 goes up, right? And I can show you that quickly just by comparing S&P 500 on top of dollar index. So as you can see here, when S&P 500 is going up, dollar index started to come down, right? Even here, S&P 500 started going up, dollar was going down or at least sideways, right? And as soon as DXY starts going up, right, market starts coming down, right? That's when we had these moves, okay? And you can even see right here when DXY was coming down, the market was going up, right? So we know they are heavily correlated. So where is dollar index heading now? Okay, to me, it looks like it's still on a bull run. I mean, you can see this on a daily time frame, right? We have nice trend line going back to January or February 2022, okay? And so now we're coming down to this trend line. So that's going to act as a support. Also, we have 50 EMA. That's also going to act as a dynamic support. And we have previous resistance going to act as a support. So dollar index is more likely to push, to act, to get support and basically go up, right? It's unlikely that it's going to break down. But if it does break down, then we are talking about U.S. market S&P 500 going up if that happens. But more likely, DXY it's getting into a support area, and this is the same thing that happened right here. Like it was coming down, see, 50 EMA acted as a support, trend line support, and the dollar index went up, right? So we can't call the DXY to be breaking down yet, okay? It's still on a bull run until we say it is not. So the other thing to look at is the S&P 500 stocks above the 50-day moving average. So currently we are at 76.54. What that means is 76% of the stocks in the S&P 500 are above their 50-day moving average. So usually when we have this high of a reading, it means we are at the local top. So I can put S&P 500 on top of this and show you basically. So let's put a vertical line whenever this reading is achieved, right? Right here, right here, right here. Okay. And actually right here as well, right? And currently we are here. So now let me explain you. So whenever we have been overextended, like here, around even at 40, right, we started going down. At this point, around 60, we started going down. At this point, around 60, 65, we started going down. On this point, 60, 70, we started going down. Okay, where are we right now? Even way above the 70. We are at 76.54. So you can decide, you can make your own conclusions, but I'm just showing you the data. Let's look at the WIG. So currently we're at 21, and we have a nice trend line from the previous lows, as you can see on the chart here. And every time the markets come to that level, the VIX volatility has spiked. Okay, you can see this area, it spiked, 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 right? So this area usually marks the local top in the stock market. So I can put S&P 500 on top of that, and let me change this to the line. So now you can see here that when the VIX gets to this level, it's usually marking the top. So if you see here, when the VIX was low, see what happened? Local top in the stock market, and the market went down. When it came down here, the VIX was so low, look at that. The market started coming down. Now we're again hitting that trend line, Okay, where are we? Point of resistance, right? As we are saying, and so it's likely that the market would come down. Okay, the VIX is likely to go up. Okay, so pay attention to that as well. Let's look at the upcoming earnings. So we have On Semi, we have AMD, we have SoFi, PayPal, Airbnb, Starbucks, Gilead, we have Moderna, we have Lucid, Robinhood, Kellogg's, the big one, Alibaba, AMC, the meme stocks, Block, Twilio, and Eli Lilly, going to be interesting. So a mixture of semiconductors and health companies, and so it's a good mixture of a lot of industries. So it's going to be interesting. But all the big stocks have already reported, like the mega cap stocks. So watch out for these companies if you are trading these. And I hope you found value in today's video. And if you did, consider like and subscribe. It takes me a lot of time to make these videos. So the goal is to get to 50,000 subscribers. So thank you for everybody. Thank you to everybody who has subscribed to the channel. Really appreciate it. And I'll see you guys in the next one. Bye.